Hi guys, welcome back to ValeTalks by Valetax. Happy Wednesday. I know for some reasons you're noticing that ValeTalks today is happening on Wednesday. Well, due to unforeseen and unprecedented events and circumstances, we weren't able to hold it on Monday. But here we are making sure that we come through every week for ValeTalks and presenting you with the best opportunities, exciting information, and education for our viewers. Thank you guys for watching. Once more, I'm Ryan, Innocent Ryan Ifere, your host for today's Value Talks. And thank you for tuning in. If you're new here, don't forget to hit that subscribe button. Don't forget to also invite your friends and share this link to your friends and your community to join and learn. So today we are going to stick to the basics like we have always done. And for today's topic, we're going to be talking about spotting trends before the headlines. What are trends? What are headlines? And how do we work with this? How are we able to identify trends and get into the markets on time so we're not left out? And how do we know when trends are about to shift or when trends are about to continue or when trends are about to end? And basically also understanding how headlines make the major moves in the market. So we're talking about fundamentals and events happening in the market. But how do we spot these trends to make the best of these moves on the charts? Today, introducing my guest, Manesh, global market strategist and educator, engineer CMT and CFT with over 25 years of experience in trading. He's worked with different financial institutions and he's helped develop the black box system. He's also the author of Trading with Ichimoku Clouds. Thank you so much for joining us today, Manesh. Good morning from your own side of the world.
Yeah,
uh,
good morning.
so on the other side of my screen is Shifu. Shifu isn't present with us today. He isn't feeling too fine, and we're wishing him quick recovery and the best of health in sooner time, and Godspeed over his health too as well. For me, I would be your host for today, Rion Ifere. I'm a senior market analyst for the Africa region and a global market analyst and internet educator at Valetax. I help traders escape confusion with clarity, and I have over 6 years of experience and I'm the founder of the Rion FX Trading Swing Trading Academy. Okay, so let's get straight into our topic for today and how we're going to go about it. So first, we're going to start with how this trend really begins. Number two, we're going to talk about the early signals. And then number three, we're going to talk about the trader's edge. So first of all, we need to understand how to begin. Second, we need to know what to look out for and what to spot when it comes to, new trends and headlines. And then number three, we talk about how you position yourself to be in this trade or to stay ahead of the market and wait for this trends to start so we make the best opportunities and profit margin from them as traders. So moving in, as always, we're going to have conversations with Manesh where I'm going to be talking to Manesh and we're going to be sharing, informations and conversations where we're going to be discussing, trying our best as much as possible to fit so much knowledge in a short period of time and make sure you understand it as well. So Manesh, thank you today for making out time to be on Valor Talks with me today. And before we get started, I want to say thank you for, showing up every day, every time we have every episode, rather, we have Valor Talks and giving us not just nuggets, but giving us a whole bucket of chicken. And we're so happy to always have you. Okay, so spotting trends
Great to be
before the
here.
headlines. So spotting trends before the headlines, yeah. So on the PowerPoint presentation I have here, I spoke about accumulation distribution, news confirms price, and patience over prediction. And why I put that here is you kind of notice technical analysis cycle and how the market moves. We always tend to see some level of accumulation before prices distribute. We see some manipulation too as well. So what would you really say are the key things to spotting trends before the headlines? Like, how do we position ourselves? Since headlines are the major movers of the market, yeah,
Yep.
and they create new trends. So if probably we were in a bullish trend and something chaotic happens, the market could go bearish immediately. What are those signs that we start to see? Because I'm always of the belief that technical analysis isn't just random and fundamentals isn't just random. They have a way of confluencing to give the overall result. Yeah. So what are those things that, we can look out for, we can see technically to understand where the market might be going to?
Okay. So let me step back and just kind of talk about what a trend is for everyone. A trend is pretty much if you look at a bullish trend, it's price going up in a continuous fashion. And that's typically where you have more buyers than sellers. And that's the
Yeah.
key thing to know, right? If it's going down, then you have more sellers than buyers. So that's typically what a trend is. Okay. I won't talk on the technical aspect yet, but just talk high level. When a news announcement comes, in order to establish a trend with that news announcement, then you need to break a support resistance. So typically what happens is before a news announcement, prices going back and forth. The buyers and sellers are battling it out. And that's typically the nature that you see. Once a news announcement comes, then you typically will see more buyers and sellers at that point. It could go up. And then if you see more sellers than buyers, then it goes down. But
Yeah.
the key thing is that you could have a big reaction initially, but if you don't break a daily or weekly resistance or support, then it's not going to establish a trend at all. Okay. If it's in the existing trend, then it could support it. But if
Yeah.
it's not, then if it's going back and forth, you need to break a major support resistance. If you don't, it could come back to where it started originally before the news announcement. So that's the long, complicated way of looking at it. But it's the best way to start a trend is you typically don't go from one trend to another. You typically are go for a trend, then it typically consolidates where you have a battle between the buyers and sellers, and then a trend can start. So if you're a brand new trader and looking to see how trends start, I would always look for a consolidation pattern first, where you basically are battling between the buyers and sellers. And then note where the top of that consolidation pattern is, where the bottom of that consolidation pattern is. And then when your news announcement or something comes out, you'll see that you break the top of the range or the bottom of the range, and then that could start a trend. So that's the characteristics I would look at, especially for beginners. A lot of people think that a bullish trend will go automatically to a bearish trend, and that typically doesn't happen. If that happens, that's with volatility, and that's typically not a trend.
Okay. Okay. That makes
What do
sense.
you think,
Yeah,
right?
you said something that I think I've always thought about, where you said about key levels, yeah, like the weekly lows or the weekly highs, the daily lows or the daily highs, yeah. And it's something that it's not really, people don't really pay attention to. Yeah, people don't really pay so much attention to as much as they should. Because sometimes people intraday traders usually could stay in just one daily candle. They could just be like in a reversal of the daily candle, and one daily candle on the 5 minute time frame. On the 5 minute time frame could just be like a whole longer trend on the 15 minutes time frame. And then they could just be like maybe above the highs of the previous day candle, and then think, they've taken out a trend, or they've broken out of a trend, or they've started a new trend, and they get lost in that. So someone just asked the question, yeah, Manesh, and said, is price action more important than news, or should they be used together? Well, I would say they should be used together, because I'm a strong believer in market is sentiment. So it's price action, it's fundamentals together, and then also looking at public opinion and general stance. So you want to use price action with fundamentals. I mean, fundamentals set the tone for the direction of the market for a short period of time or for a long period of time. So if the market if for instance the economy of that currency you're trading has a high inflation, so you kind of have an idea that traders and investors will be positioned toward to want to buy more of that currency because they know that the reserve bank of that economy is going to want to what to hike interest rate. Yeah, if they're hiking interest rate, it means they're inviting more investors. They want more people to invest in the currency. So that therefore currency strength. So if there's currency strength, it means you then go back to your chart now and start to look at the price action to see the bullish correlation between the news and the direction of the technical analysis. So when you place the both of them together, that gives you perfect confluence. What do you think, Manesh?
No, I completely agree. One of the things you have in news announcements, right?
Yeah,
But remember one thing, who could start a trend? It's not going to be small retailers that start a trend. It's going to be institutions.
yeah,
And let's say I want to buy a whole bunch of dollar pairs, right? I'm not going to go out there and put my huge order out right away. Because if I
yeah,
do, I'm going to make the price move. And whatever price I want to get it at, I'm not going to get it at. It could be a 50 pips higher, 100 pips higher from what I really want to get at if I put the huge order out right now. So institutions are going to slowly buy or slowly sell so they don't affect the price and they could get in at the original price they want to, right? So you'll see a slow accumulation of their positions. And then what happens is, and now will typically before the news, and then the news will happen, and that's when they get more and more positions in there. But you'll start seeing positions, a slow movement of price because institutions are slowly entering these instruments that they want to hold positions for. And you'll
yeah.
see that accumulation happen with time. And then the news is just the catalyst that kickstarts it in their particular direction. So
Yeah.
it's you want to use both for everything. Reason why is the charts will tell you the accumulation that they're doing with a particular instrument, and then the news announcer will be the catalyst that breaks the support resistance to start the
Yeah.
major trend.
So that sums it up. So price action alone doesn't work, doesn't do the magic, but it's a it's a collaboration between the both of them. You just need to know when each of them plays a role. So it doesn't mean because there isn't any form of a macro announcement happening, so you shouldn't want to, execute or trade in the market. It simply means that you should. Sometimes I think the confusion, sometimes is that people tend to think that fundamentals is just macro releases. That's the issue they have. They think it's while it's happening immediately, but they don't understand that that macro release for the month of January sets the tone for February. It sets the
Yeah,
tone of how people will view the month of February. So I think it's the knowledge and how it is translated that matters. So it's not the immediate release or announcement that moves the market. It's what it does after the release that sets the tone for the market. It's going to decide if markets are going to be slow or markets are going to be aggressive or market would be heading to a point before the next announcement. So you just really need to understand how to translate it. And one of the easiest way to translate it is to understand in essence what the announcement was about. So when you hear FOMC, don't just think about the interest rate cut or increase. Think about the statements by the Federal Reserve chair to know what he's saying and how it sets the trajectory for the following month and how they intend to manage, the monetary policy. So that's how you actually apply fundamentals properly to technical analysis. But on the other hand, if you do not know so much about fundamentals, the good thing about technical analysis is it helps you control that trader's curiosity where you just need to look out for patterns, understand the patterns, and then manage your risk. For as long as you manage your risk, you can never be too wrong in the market. I think that's another thing. You can, as long as you manage your risk, you can never be too wrong because you're only going to be taking losses that you're accommodating, except you're not managing risk and then you're guessing and you're just taking bets on the market. But for as long as you have a technical edge and you understand technical analysis, patterns, trend lines, support resistance. People make a lot of profits from just support and resistance. Yeah, because they manage their risk. So not every support and resistance will hold, but if 5 out of 10 hold, and you have a good 1:2 or 1:3, you're always going to stay profitable. Yeah. So that's that. But in the grand scheme of being a good trader, the blend of both of them keeps you at a higher edge and higher understanding of the market than the regular just support and resistance trader. I hope that answers your question. Next details. Okay, so
One quick one quick comment I'll just note.
yeah,
If you take the US, when the Fed comes out and announces the announcement, typically
yeah,
when the announcement happens, you get one reaction. Then
yeah,
an hour later, the Fed comes and speaks, you get another reaction. And
yeah,
then the next day, you get another reaction because they're
yeah,
going for the minutes of the Fed and dissecting his words and trying to interpret what it means for the future. So you
yeah,
typically will get three types of reactions, with a lot of times the Fed's coming out with about interest rates.
yeah.
And that could move the markets in different directions or same direction, depends on what they're saying.
True. So at the start of the news, you have the consolidation, you have the ups and downs, then you have the retail traders coming to the market, going in the direction where they're reacting based off the numbers. Then we have the real traders and investors who finally understand the statement, come into the market to follow the actual direction or trajectory of the market, or they wait till after a couple of days and allow prices get into a proper supply or demand before they actually start to move in the actual direction of how the statement defines it. And that's very true. I'm just thinking, just when you said it, then it came to mind exactly those three phases. Yeah. So
And typically, what you'll see is the first day is more short-term trades. The second
yeah,
day is typically when the trend will be established.
yeah, very true. Very true. That I have noticed a lot of times. That I've noticed a lot of times. So that's very true. Okay, so let's move to the next one, which is the early signs, Manesh. For me,
Yeah.
I have the PowerPoint. I said price behavior changes before narratives too. So what I mean by price behavior is how people start to see the market. So price behavior, you see, when people start to sense something's about to happen, prices start to consolidate. Just the same way it happened on the BTC USD when prices got to the all-time high of 126K, if I'm correct. We started to see a slow, and then prices started to consolidate at that same level. Prices tried to go above it but couldn't. They started to consolidate. So price behavior usually changes before the narratives do. And I said, structure, momentum, and relative strength. So what I mean by relative strength is, the way the relative strength index works, where there's an exhaustion, and yeah. So those are like my own early signs to know when a trend is about to end. Yeah. So how about you? How are you able to spot when trends are about to end
I mean,
and
it's
start?
just pretty much looking at charts, right? I'm more of a technical person compared to fundamentals.
Yeah.
Fundamentals are there, but for me, it's about timing. So with fundamental analysis, it could be delayed. So I'm looking at the technical charts for everything there. And I look from the higher time frame first, and then I go down to the lower. So typically my lower trade time frame trades are trading in the direction of the higher.
Yeah.
So I have an example here. Should I go to the charts now or wait
Yeah.
until
Yeah.
later?
Sure. 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 Please go to the
So I could
charts.
give you a perfect example. Okay. I think you have to stop sharing, right?
Okay.
It's not letting me share.
I think I think you could. I think
It
you
says
could.
do not start sharing while the other participant is sharing. You got to stop sharing.
Okay. So I need to stop sharing.
Yep.
I'm trying to stop sharing for. Okay. Okay. Yeah. I'm done. Stop sharing. Here you go.
So I'm just going to take not a regular normal pair. Most people talk about dollar pairs, yen pairs, but I'm
Yeah.
going to talk about something a little more exotic, not completely. the Euro Australian here. And one of the things that we do is that when you see a trend like this, which has a whole bunch of big bars, this is not a trend to us. That's too much volatility. A trend is where you have slow movements where institutions are accumulating a position with time. They're not going to sit there and buy huge, massive orders at all and cause these big bars here. So when we
Yeah.
see this, we typically, this is too much volatility here, and we don't recognize this to be a trend. In
Yeah.
fact, what goes up too fast could come down too, and that's what we're looking at. So we look here in this scenario here, this was too much volatility. So we know at some point this is going to end. Okay. So what we're doing is we're waiting for it to end and then go through a consolidation phase, which you're starting to see here. And you can see here, it hit the top two times here, couldn't break it here, tried to break it here, couldn't. But what we're looking for is to break below this little support here on the weekly. Once you break it, then we're looking for it to come back to test it. And then exactly what you said, you've got to break the weekly highs and lows. And here we close below the weekly low here. This tells us that institutions now are being accumulating positions to short this here, and now it's ready to go. So with the news announcement that came here, this is now starting a catalyst to come down. And you could see it's coming down, 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 down. And if you look at the origin of this whole movement here, this is the resistance it broke to come out of there, but this is the origin here. So it could come here, but the original position here, which started the whole volatility, is down here. So this is where we could pretty much would take the rest of our positions off. So you could take some positions here and then here, but you could see long term here, we waited for a consolidation where there's a battle between the bulls and the bears. And you could see clearly here, you've been bouncing back and forth between the two levels. Here, you bounced off here, then you didn't come back to the support. You came back up here, you bounced off there. Then you tried to break it here, couldn't break it here by following through here. And then you, instead of coming up, it came right back here. You closed below it, and the next bar here close below the weekly low, that was your signal that there's a long-term bearish trend here. All you needed was a catalyst. And this week here, we got the catalyst here with the fundamentals that pretty much started the whole thing movement down. So you could see these institutions were accumulating bearish positions, especially right here. And you could see they were waiting for that fundamental news to come out to kickstart this thing to come down. And once it starts coming down, this is when the retail traders are now coming in and trading this and betting on it bearish, whereas the institutions have pretty much accumulated a lot of their positions already, and they're slowly taking profits coming all the way down to here. So this kind of gives you an idea of a long-term position where news kind of kick-started it right there that broke the support here of the consolidation pattern to start this whole movement down. And this was 1,000 pip movement down here. And you could see you're at the top here, but the originality of this whole volatility movement's here. So there's high probability you're going to get to here.
Mm. So if for someone who is on the lower time frame now, right? For someone who's on the lower time, probably someone who doesn't come to the weekly time frame, let's say the max time frame they get to the daily time frame, how would they be able to spot? Because whether we like it or not, we didn't really see a break of this AUD from July when prices got to that point of the 1.81 in July. We didn't really see a continuation to create a new higher high, and prices just started to settle from there. Prices consolidated before breaking below and continued the move to the downside, right? So for someone who's on the daily time frame, how would they have been able to spot and identify? Because if I was on the weekly time frame here, permit me to annotate on your screen. If I was on the weekly time frame here, I would have spotted this low as my most valid low to know if I'm out of this bullish move. But I could also see that there was some sort of structure at this point here, right? And then prices, this highs here, taking out this bullish lows at this point before prices go in back and then coming down to sell off. Okay. But if I was to go by the weekly structure and look at the overall structure, I would have been picking this particular low here because this looks like the higher low that stood out the most that failed to create a new higher high. So this would have been my proper invalidation point. So if I was to be waiting for a break, I would have been waiting for this break right here. So for someone
Okay.
who's on the daily time frame now, how would they have been able to spot this movement to come into the market on time?
Okay. So let me answer the first part of your question is when you if you trade lower time frames, it's no problem. You
Yeah,
should always trade in the direction of the higher time frame. I understand
yeah,
retail traders have this argument, especially on internet, where sometimes the lower is influenced by the higher and higher influenced with the lower. If you
yeah,
really want to be consistent and profitable and you want to sit there and have a high reward risk ratio, you have to trade in the direction of the higher time frames. If you don't, then you're going to really not make it at all because your winners are not going to be big and your losers will
yeah,
be bigger. Okay. So if you look here, we always look for two things. One is to break a support resistance and then to follow through. Okay.
okay,
And we look for that on the weekly time frame first, and then we could go down to the lower time frames. So here you could see that we broke the support here. Do you see that? You closed below that level here. Okay.
yeah,
Here we close below that level, but we also want to close below the previous week low. We did not do that at all. So even though we broke the support, it tells us that the trend is not starting at all because we did not come back and close below on the second bar here. We did not close below this previous bar low. So any movement that's coming down, we believe it's fake. And that's why we never even would look to trade here at all. Okay. Over here, we're not really trading any of this here. If it comes here, and remember, we're thinking bearish because of this whole movement here. So once it comes here and holds that level, this week here, we close below the previous week low. So at that point, we could look for bearish positions here. But really, what we're looking for is this price action right here. We broke the support here. We closed below it. The next bar here came back and tested it, and it closed below the weekly low. So whenever it gets back below this weekly low here, on the lower time frames, we will start to look for bearish positions on this week and that week and from that point on. So one way you could always do it is look for once you close below that level, you want to make sure you have another week where you may close below the previous week low. If you do, then this week here, from this point on, you could start always looking for bearish positions on the lower time frame. And at that point, you're going to take these positions and you're going to take the risk from the lower time frames and access the reward from the weekly that gives you the potential to have more than 3-to-1 reward risk ratio. Does that make sense?
yeah, yeah. It does make a lot of sense, and now I understand how you read the candlesticks and how you read the close of candlesticks below the weekly and below the weekly candles, and that makes a lot of sense. That
And
that
believe,
is very
yeah,
eye-opening.
if you're day trading particular instruments, Ryan, what product are you trading right now?
Um, GBP USD
Okay, and are you bullish or
and
bearish on it?
XAUSD as well. XAUSD, I am bearish on XAUSD now due to the non-farm payroll release. We have 130K jobs coming in, higher than expected by 3 times the size. So I believe there's a lot of strength for the USD right now. So anything quotes the USD should be selling into the USD at the start of the New York session, midterm.
Okay, so if I'm bullish in a position, bullish day trading, I will
Yeah,
not day trade that instrument bullish unless the previous week closed above the week before high.
yeah,
So I will here, right here, if I right here, I will only trade this bearish because this here closed below the previous week low.
yeah,
So I will not take here, right over here, this bullish bar, this bar here, did not close above the previous week high or low at all. So over here, I will not trade, day trade at all.
Okay.
I always want to trade where the weekly has closed above the previous week high or low, and then I'm allowed to trade that week day trading with it. Without it happening to do that, I'm not going to do that.
Mm, mm, mm.
So, you hear, you could see here, this week here, I was not allowed to trade it bearish. I could only trade it bullish because this bar here closed above that way. Over here, now I could start day trading this bearish because this week here closed
Very.
below the, yeah. So I'm not going to sit there and day trade any particular instrument unless on the weekly chart, the weekly bar on the previous week had closed above or below the previous week. And if it has, then I'm gonna basically day trade it and carry that momentum through.
Well, that's sharp. That makes a whole lot of sense now. So you're trading your intraday trading based off, weekly direction. And that I think that's a very safe way to actually view the market. It
Yep.
gives you full idea of, 5 trading days and how those 5 trading days react and where the best position is for you as a trader. So
Yeah, so fundamental news comes in and I'm bearish on
yeah,
my fundamentals. I need to make sure that the previous week for that particular instrument is closed below the previous week low. If it is, then I could trade that fundamentals bearish. If it's not, I have to wait that week and see what happens with that bar, and then I could trade it the following week.
yeah. Thank you, Manesh. So I hope those watching at home, those watching if you're watching on YouTube, you're watching on Facebook, I hope that brings more light to how day trading should work. It shouldn't just be off your only your 1 hour chart or your 15 minutes chart. There's I think I'm looking for the right word. Yeah, there's a timing system that should be applied to it. Yeah. So if the week is bullish and bearish, you're most likely in a consolidating market. Yeah, and then the following week you need to understand the direction of the market. If there's one thing I got from Manesh, like if I had a doji candle this week, it means next week if I would want to trade in line with the right direction of the market, I would need to wait to see how the following week closes. That would confirm the previous week consolidation and the direction in which the market is choosing to go at that very moment instead of just trading what I see on the lower time frame. So that makes a whole lot of sense. So for
Yeah,
me, I think one early signals. You said?
I'm kind of cheating. I'm taking the risk on the lower time frame and using the reward of the higher,
Higher time
right?
frame. Yeah.
Yeah.
Yeah, that makes a lot of sense. For me, I think one of the early signals for me would be so for instance, say I was trading on the weekly time frame and I knew the market overall was bullish. Yeah. And there's this thing I do where I view the market in two ways. I mean, three things I usually say. I want to know where the market is coming from. I want to know where the market is going to, and then I want to know why the market is going to where it's going to. So it's a magnetic calculation for me. Yeah. So I think of it this way as for every for every um for every force, there's a repelling force. Yeah. So if the market is pushing down, it's because something is pulling it. And if the market is going up, it's because something is pulling it up too as well. So I believe that if the market is selling, there's a necessary demand it's coming to mitigate. And if the market is buying, there's a necessary supply it's trying to get to. So I want to first look out for the demand and the supply, spot them out, then want to see what direction of the market I'm in on the lower time frame. Am I in the impulsive side of the market or am I in the corrective side of the market? So if let me share my chart. Okay, let me share my chart this time around. Uh okay, just tell me if you can see my chart, Manish.
You see your PowerPoint, right?
Okay. So this is my chart now, for instance, yeah.
Yep.
So
Now I can see
if
it.
okay, so when I look at the USD JPY, yeah, okay, so this is the USD JPY on the weekly time frame, right? So when I look at the USD JPY, I see on the USD JPY that I have been bullish this far up until this point, okay? And then I look over here and I see that there was a previous resistance here, meaning that there's a lot of stops because I trade liquidity. Yeah, I like to identify liquidity on the chart. So this was a previous high. So I know there's been a lot of position stop orders at this point, and prices just happen to have manipulated those stops and then closed below. So I saw this close and then I saw this pattern. I saw this evening star pattern here on the weekly time frame. So I knew to an understanding that on this is is a much more relevant level than this recovery or what should I call it, preceding bullish structure on the USD JPY. So what I did was go to the lower time frame
Can you
and
zoom in?
just you
Zoom
said
in some more.
okay, so
There you go. Now we can see it. Okay.
aha, so I could see the take out of this previous bullish structure by the peers. So I saw this huge bearish candle, and I knew that for the fact that this huge bearish candle was existing, it means that it was definitely attracted to something, and that was the liquidity below this previous bullish higher low to the upside. So I expected for it to take it out and then buy all the way back to a previous key level, which is this previous resistance here, and then before the sells would continue. So I view the market not just with candlesticks, but like I try to view the whole pattern. Yeah. So I like to view the trend, like the higher highs, the higher lows, and invalidation of those points are key levels for me. So every time I get an invalidation of those points, I know something is about to happen in the market. So if this point was invalidated now and I had like a major demand level to carry out this market to continue bullish, I would have, said, okay, you know what? I would continue to buy from this level. But when I looked at the prices, I noticed that the main area the market was looking out for was this fair value gap here. So there was this gap that happened here. So I just kind of had an idea that this would be the gap to continue the bullish movement because overall, when you look at the monthly, it's still very much bullish. The USD JPY is still very much bullish. We're just stalling in some sort of consolidation here at this point. So going back to the daily time frame, I just kind of had that, you know, trust in this fair value to be the one responsible for initiating this move. And when we see the structural break or shift on this time frame here, we see we got the shift here to continue bullish, the break of this previous bearish structure here, this consolidation here, but prices never fully returned into this fair value. So I just mapped out all this as, retail traders and institutions would definitely find them before continuing market to the upside. That was just, how so the major thing for me in spotting trend shifts or trend continuations is the structure. So let me sketch. So if I have a high, low, high, low, high, low, the very moment I get that break below this low, now I know something's happening because markets shift the dynamic itself. It's changed the whole character of the market. So now I then want to go back to identify, okay, so this would be a good point because that would create some sort of heads and shoulder pattern. And then I also then want to spot where exactly the actual momentum that took out this structure came from. Sometimes it's not this high. Sometimes it's just in between the rush to the downside. And then I spot and wait and then confirm with the next lower low. And then now I can spot not just a low and a high, but now I have the shift from a lower high to a higher high to a lower low and to a lower high. So that just gives me the confirmation of a switch in market structure or trend. And then I want to trade with that. But it's not just in a random place. It has to align with what you're talking about now. It has to align with a weekly level for me because weekly levels are like major points. Weekly levels hold prices for years on years. Yeah, so we could see prices hit a particular level on the weekly chart. It hit it in 2020, 2023, 2025. So when prices get to that kind of level and then I spot this shift in the trend on the market structure, then I know I'm about to get a very good trend to the downside till the next high possible demand level. So that's how I spot my own trend. So those are like the early signals I look for. I look for the consolidation. I look for the shift in momentum. The moment I get that shift in momentum, prices are no longer either extremely bullish or extremely bearish. I start to say, okay, something's about to happen here. So that's how I spot my own early signs.
That's great.
Okay, so yeah, next things next is what then is the trader's edge? What then is the trader's edge?
You want to start? You want me?
Yeah, please go. Go ahead. You start.
I mean, it's just as I said, you have to be patient and wait for that setup to occur, right? So, you have to wait for that break of that consolidation pattern and the signals to sit there and go in and trade those particular products. Once the trend starts, then you could keep on trading that day trading or long-term positions with that particular position for a long time. But until that trend starts, you have to be patient for that, the pattern to evolve and the alignment to happen. And a lot of people just don't become patient at all. They try to rush it. And you could see on that Euro Australian pair, it took a couple of months for it to break out of that consolidation pattern. But when it did, now it's a trade that's giving for 2 months, 3 months now with over 1,000 pips easily.
Yeah.
So you have to wait and be patient. Patience is the name of the game, and wait for that pattern to occur and to fit your trading plan completely.
Well, so for me, I would say one of the things that I like to think of here as the trader's edge when it comes to like spotting trends and being able to catch them on time is first observation. I think as a trader, you need to train your eyes and your mind to see these things. It's why back testing is highly encouraged when it comes to trading. Yeah. You want to be able to see patterns happen so many times. I mean, everything that happens in the market is random. But if there's one thing that I'm so certain about is that patterns would always repeat themselves. They might not play out exactly the way the last one did, but because you've seen it so many times, you kind of have an idea of how it will play out. So what saves you as always is your risk management, yeah. But then alignment happens next. So when you've identified, you've observed patiently, and you've aligned yourself with that particular pattern, then now you ask yourself, what was the last thing you did wrongly and how can you make it right this time around? Sometimes people don't make losses from their inability to see the correct thing. They make losses from their inability to manage the trade. So you could see the same thing happen so many times but still lose to it. It's not because of the pattern not playing out correctly sometimes. It's either impatience, it's overconfidence. One of those things affects the trader, yeah? So it's always about observation first. Then you align the observation with your trading goals and your trading rules, and then you confirm. So let's take for instance, we 3 weeks ago we're talking about gold. And I kept telling you that I wasn't so certain about the continuation of the buys on gold. I was highly confident that sales were going to happen, but the market wasn't showing me anything to make me sell. The market wasn't giving me any sort of sell patterns. So I had an inclination that okay, the sales would happen, but I didn't have proof that the sales was going to happen. So there was no way I was going to go ahead telling everybody to sell, telling everybody, but I knew the sellers were going to come into the market, right? So it's the same thing. I was observing the market and I knew something was off about that market, but I didn't have enough proof. So there was no alignment for me. But the very moment I got that alignment, then my trade became a success. So it's not just about saying or thinking I could predict the market, but I needed to observe first. then needed that alignment. So alignment basically brings you confluence. Yeah, it brings you your ability to use the fundamentals and the technicals and everything together, your edge, waiting for your proper technical edge as well, and then applying a bit of, the necessary sentiment. That is what brings the alignment. Then the next thing is trade confirmation. How do you confirm the direction of the market? So for me, I showed in my chart, my confirmation for my direction is having market, break below the previous key level, which is the previous higher low on a bullish trend. I want to see prices go back and fail to create a new higher high and break below the lows that couldn't create a new higher high. Now that's my confirmation that okay, I've moved from bullish into bearish. So now I've gone from creating higher highs and higher lows to creating higher highs and lower highs with lower lows. So that's those are technical confirmation for my own trades. Yeah. So that's what we mean by trade confirmations. Or what do you say, Manesh?
No, I completely agree. I mean, like you said, you got to have a plan, right?
Yeah.
So you have to have a plan, an idea, and from there you have to wait patiently for the alignment to happen, and then you execute, right? So, but most people don't have a plan. They just look at charts and trade. Like I think a couple of weeks ago, you're like, silver. I'm betting on it going silver going down, but you're
Yeah.
waiting for the signals to come. So you had an idea that silver was overextended, just like gold, like a lot of people did. But the problem is they would sit there and keep on shorting, 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 and then kept on losing. And
Yeah.
you waited for that confirmation on the charts, the alignment to happen, and then you execute it. And that's
Yeah.
the thing. You're following your plan, long-term plan. Most people don't have that long-term plan at all. They don't look at the higher time frames. They just go straight to a time frame chart and start trading it based on signals and stuff like that. And that's really where you're going to be wrong and lose, and you won't be consistently profitable. You have to look at the higher time frames and come up with a plan and determine if it's bullish or bearish. If so, where? Wait for that price to get to that level and then execute your trading plan to enter that trade. And you illustrated it perfectly with the US yen now. You looked at you looked at the weekly time frame. It had all these resistances that dated back for years, got to
Yeah.
that level there, held it. Once it held it, now you're like, okay, I got a confirmation that it's holding it. Now I could look to going bearish. So then you looked at your trading plan and executed your rules to go bearish. And now you're winning, and that's basically how you have to do it. You have to plan, wait, and execute the three steps.
Very simple. Very, very simple. So like I left a quote here where I said price action reveals intention long before confirmation. Yeah. So you could get the intent. You could have, okay, yeah, this might happen, but it's not happening. It's just showing your intentions. So that's why you need confirmation before you take a trade. Yeah. So you could be consolidating at a demand level. Doesn't mean it's going to buy from that level. Yeah, because demand levels, you have a lot of orders at that point. So prices, you never know what price want to do. Price could decide to liquidate everybody before moving. So it's your ability to wait and have a confirmation style. It could be a technical confirmation style, or it could be fundamentals that guide your confirmation. But you need to have confirmation before making a trade. Okay, so I think that kind of sums up like when it comes to trend spottings and all of those things. I have three major takeaways here, and I'd also like you to add, one of it of yours. So the first one is price moves before narratives are formed. Is something that I think everybody should keep in mind that the movement of prices would happen before, like you would get that quick spiral of prices before market restabilizes itself and then starts. The narrative, basically, I think, let me explain what the narrative is. Narrative is structure for me. It's the character of the market. Yeah. So we could move from bearish to bullish, and you could get that quick, impulsive, bullish inflow into the market, but that doesn't just immediately set the tone that it's a bullish market. You need to wait to get that character of the market start to form before you then say, okay, now we're in a bullish trend. or we're in a bearish trend. And structure and behavior signal change early. So you'd start to notice that slow. You'd start to notice the accumulation, the manipulation before the the distribution happens, or you start to notice like prices start to create like reversal patterns at a key level. It could be probably like a heads and shoulders pattern. It could be a double top. You could see prices keep failing to break out of a level. Those things signal opportunities to follow the market, or you can wait for the confirmation, which is then, I think every chart pattern has a confirmation. Heads and shoulders requires you to wait for a break below the neckline and enter at the retest of the neckline. Same thing with the double top. Those are confirmation systems that have been set in place alongside these chart patterns. Then next thing is patience turns into information, not opportunity. Okay, so being patient helps you learn. It doesn't necessarily mean that every time you're patient is because you're looking for an opportunity. Sometimes patience simply means you sitting and watching the market play out so many times that you learn from it. So the next time when you see it, you're able to spot it. So that's what I mean by pattern recognition. So for some people, they like to back test. And I'm sure someone like Manesh likes to forward test as well. You like to see the market play out and then you learn from it while you're not even involved in it as well. So that is also like a major takeaway that I want people to go with today. So if you're still watching and you've come this far and you're not following Valetax on YouTube, please make sure that you hit that subscribe button, turn on post notification, so you get notification on when our next episode will be airing. If you're watching on Facebook, anywhere, make sure to follow Valetax and make sure to invite your friends next time you come on ValeTalks by Valetax. Okay, thank you guys. So Manesh, do you have any takeaways for them?
No, I mean, the biggest one I think we both talked about is plan on the higher time frames. Look at the weekly and plan from the weekly a long-term view of a particular instrument. And then, wait patiently. I put alerts at critical level, and then when they get alerted, then I know now it's time to execute. So, you got to plan, wait, and execute the 3 steps.
Very simple. Very, very, very simple. Very, very simply said. So, Manesh, is there anything you would want to add before we call it a day today?
No, I mean, if, these talks have been great. They've been accumulating where people are getting a lot of knowledge with time on different subjects and stuff like
Yeah.
that. We already talked about today here. One of the things just to be careful of, as I mentioned it earlier in the example I gave, be careful on a volatility trend. In the last couple of years, we've had a volatility come in at extremes, and people think those are trends. They're not. A trend is something that goes up slowly with time, not very fast with a lot of big bars. And if you have a trend started with a lot of volatility too much, it's got a high probability to come back. So be very, very careful with that. So make sure your trends are slow movement going up or down, not big ones, because they're not really trend.
So you're trying to say, so indirectly you just threw shades on the XAUSD. You just literally told all of us that the XAUSD isn't trending.
No, I mean, like you said, you were looking for bearish trades. I was doing the same thing.
Yeah.
It's too fast.
It's too
Uh, you know,
fast.
too
Way too
fast.
fast.
I mean, think about it this way. There's no way an into like take silver, for example, or the XAU, right? It's at 80, and an institution wants to buy at 80. If they put a massive order at 80, they're never going to get filled at 80 because there's going to be sellers, X number of sellers at 80, X number of sellers at 81, and so forth. So if they throw all their orders out there right now, then the whole price is going to move. And
Yeah.
it's not going to be, they're not going to buy at 80, they're going to buy at 85. That's a
Yeah.
huge percentage slippage,
Yeah.
right? To a point, they're not going to do that. They're slowly going to buy to a point price is not affected, right? And we did that in the institutional world. Like, for example, we wanted to buy Apple in the institutional world. And this is Apple before it really became big. And
Yeah.
we wanted to buy 1 million shares. We couldn't just do that because if we went out and put an order out for 1 million shares of Apple, we would affect the price completely. So we had to
Yeah.
buy slow movements, slow movements. Every time it went down, we accumulated. Every time it went down, accumulated. And we just did that accumulation. And that's typically what happens in a consolidation pattern. Typically, institutions are accumulating. And then what happens is they're accumulating before a catalyst occurs, like a news announcement and stuff like that. So they're accumulating before that news announcement because they planned it. They were looking at that news announcement maybe a month or 2 months out, and now they're saying, okay, that fundamental news announcement is going to be bearish or bullish. So now I need to start accumulating at this price because when that announcement comes, it can move huge. So they're slowly going to be accumulating, and that's what retail people don't understand. They think just because a big bar movement happens, that's when institutions got in. No, they've been in already. And
Already.
that's typically during accumulation phase, which is a lot of times a consolidation pattern, right?
Yeah.
And you could see that in that example, Australian USD, they were
Yeah.
basically accumulating bearish positions until that moment came, boom, it dropped.
Very true. But that's very true. Thank you so much, Manesh. Thank you so much for joining in. Like I tell you, every time I hop on ValeTalks with you, I'm always learning something new. I'm always having to fish from your ocean of fishes and knowledge and everything you get. So it's always an interesting one for me. And I know our friend and partner Kaza could be watching this. And Kaza, we just want to tell you to please get well soon so that we could have
Yeah.
you on the next episode as well. So remember to stay hydrated as much as you can. And if you need any help at all, please always reach out to us. We're always going to be here. So thank you guys for watching ValeTalks today. And I hope you've been able to understand how to spot trends early on and make the best of them. And we'll catch you on the next episode of ValeTalks by Valetax. Until next time, it's bye for now.
Thank you. Bye bye.